Hi everyone, welcome back to Corporate Decoder, the place where we dig into the documents companies put out. Today we're diving into a report from AGNC Investment Corp. And let me tell you, it's a bit like watching someone try to parallel park a yacht. There are a few interesting turns along the way. So what's the story? AGNC held its annual meeting and some important decisions were made, including voting on who gets to sit on the board and how many shares of stock they can issue. We're going to break down what all of this means for the company and its investors. First up, the annual meeting. It happened in April. Think of it as a company's version of a town hall. Only those who held stock on a specific date back in February got to vote. At this meeting, some important votes took place, things that could change the company's direction. One of the main things on the agenda was picking the people who would be on the company's board of directors. It's like choosing the captains of a ship. The stockholders or the owners of the company got to vote for who they wanted. 8 people were nominated and the shareholders voted on whether they wanted them to be on the board for the next year. Almost all nominees received overwhelming support with hundreds of millions of votes in favor of each. But let's keep an eye on these names. They will be steering the company. And now let's talk about something a little more complicated. The company asked its shareholders to approve a change in the company's rulebook. This change would allow them to issue a whole lot more shares of stock, increasing the authorized number of shares from 1.5 billion to 2.25 billion. Think of it like this. Imagine a pizza is split into slices and each slice is a share of the company. If you want to raise more money, you can cut the pizza into more slices. In that way, each slice will be smaller and represents a smaller ownership, but the whole pizza can then be sold for more value overall. A large majority of shareholders agreed to allow the company to create more shares, so this passed. This can have big consequences like making existing shares less valuable, but it also gives the company more flexibility. Next, the shareholders got to vote on whether they thought the executives were getting paid fairly. This is a non-binding vote, so the company doesn't have to listen to what the shareholders say, but it's a good way to see if the owners are happy with how the company is run. A majority of shareholders agreed with how the executives are paid, but a notable chunk, over 20 million, voted against it. This could signal some unhappiness with the company's performance or how it's rewarding its leaders. Finally, there was a vote on who would be the company's outside accountants. The shareholders were asked to say whether they approved of hiring Ernst & Young LL to check the company's books for the year. A big majority voted yes. Ernst & Young will be doing the accounting work. This is an important step in making sure the company is being honest about its financial situation. So what's the big picture here? AGNC is making some big moves, from shaking up its board to potentially issuing a ton of new stock. While most of the votes passed without much drama, the vote on executive pay shows that some investors are not completely satisfied. Now let's put on our Warren Buffett hats and take a closer look. AGNC is a real estate investment trust, or REIT, which means it makes money by investing in mortgages. Because it's a REIT, this also means that it's obligated to pay out a large percentage of its profits as dividends. That makes it a company that might be attractive to those looking for a consistent income stream. One thing that stands out is the increase in authorized shares. On one hand, it gives the company a lot of flexibility to raise money when opportunities arise. On the other hand, if they issue too many new shares, it could dilute the value of existing shares and lower the dividend income to its holders. So it is a bit of a balancing act. Also, the fact that quite a few shareholders voted against the executive compensation package is something to note. It could mean that some people have concerns about the company's overall performance, or that they just think the executives are getting paid too much regardless of how well the company is doing. Whatever the case, it's worth keeping an eye on. In conclusion, AGNC Investment Corp is at an interesting turning point. The company has the opportunity to grow, but it needs to make sure that it's doing so in a way that benefits all of its shareholders. The decisions made at this annual meeting will likely have a big impact on the company's future, so it's important to understand what they mean. Thanks for watching Corporate Decoder. If you found this breakdown helpful, give us a like, leave a comment, and don't forget to subscribe for more deep dives into the world of corporate filings. Until next time.